Gold price minus 3.3% in July after India duty shock as stocks plus 6.7%, silver erases losses. Gold prices erased an earlier 0.7% gain to three-week highs in London trade Friday, closing July at $1,754 per ounce in the world's central bullion market with its fourth monthly loss in a row. Dropping 3.3% from the end of June, gold bullion prices this morning rose near $1,768 per ounce before falling to $1,754, the lowest London month-end since September 2021. Global stock markets in contrast added 6.7% this month, rallying to 2,717 points on the MSCI World Index, a 13-month low when first reached in May, but 250 points above mid-June's 18-month low. Developed world bond prices also rallied in July after falling hard in the first half of 2022, pulling 10-year US Treasury yields 30 basis points lower to 2.68% despite the Federal Reserve hiking its overnight rate by 75 bps per second for a second month running as inflation data came in at four-decade highs above 9% per annum. Although bullion saw a sell-off below $1,700 in July, Reuters quotes one spread betting bookmaker, "It is significant that long-term support at $16.75 to $80 was tested and held last Thursday." Gold's drop through $1,800 had come on the 1st of July, when India, the precious metals number 2 consumer nation, suddenly hiked bullion import duty back up to 12.5% in the face of a surging account deficit and a record low rupee on the currency market. India's Prime Minister Narendra Modi today opened the new India International Bullion Exchange, IIBX, in Gujarat's Gift City, enabling jewelers to buy and then import metal directly, rather than via a qualifying bank. Fabricated gold product demand worldwide was 1.8% greater than Q2 last year between April and June, new data from the Mining Industry's World Gold Council said this week, with jewelry consumption rising 3.7% by weight while retail bar and coin demand held dead flat. That still put total consumer and technology demand 4.7% below the previous five-year Q2 average excluding the COVID crash in gold demand of 2020. Central bank demand for large gold bars continued to lag last year, taking the official sector's first half total down 17.1% from H1 2021. While gold ETF investment trusts shrank by 1.0% across Q2 as shareholders sold out. The giant GLD gold-backed ETF ended Thursday unchanged in size for the third session running, heading for its sixth consecutive weekly outflow. Now needing 1,005 tons of bullion to back its shares in issue, the least since late January, the GLD has shrunk 4.3% across July, its sharpest one-month liquidation since March 2021. World number 2 gold ETF the iShares IAU, also primarily listed in New York for U.S. investors, has meantime shrunk by 1.7% for the second month in a row, needing its smallest backing since start March at 501 tons. The April to June 2022 quarter meantime saw the largest Q2 volume of gold mining output on record, plus the strongest Q2 scrap supply since 2019. On the economic front Friday, and after the U.S. reported a second consecutive quarter of GDP contraction yesterday, Germany said it saw 0% growth in Q2. Looking at the current rash of corporate results, the bad news is that the percentage of companies beating earnings forecasts is the lowest it's been since 2015, says Michael Batnick, Director of Research at U.S. advisory Ritholtz Wealth Management. The economy is rapidly transitioning towards stagflation, reckons economist Vincent DeLuard at brokerage StoneX, warning of a 5% reduction in S&P 500 index earnings per share over the next 12 months due to rising borrowing costs, oil and the strong dollar. In most recessions, says Ed Clissold, chief U.S. strategist for advisors Ned Davis Research, EPS growth has dropped by more than 20%. Industrial commodities also fell in July, with crude oil rallying to $101 per barrel of U.S. benchmark WTI on Friday but losing 5.6% from the end of last month as copper also bounced but traded 4.3% below June's close. Silver prices lost less than gold bullion in July, surging after this week's U.S. Fed rate hike decision to trade back above $20 per ounce and cut this month's drop to 1.8% at London's benchmarking auctions.